Are you ready with the pens and books? Because when it comes to my Zooms, you have to write something. You have to write something in your notebook. Okay? Yeah, you have to write something in your notebook. You have to write something in your notebook. Okay. Now, where is my okay? Okay. Who is ready and who is not ready? Do we have our trading review? Do we all have our trading review? Do you guys have trading review? Do you have trading review? Okay, let me go to Royal Q. Let me go to Royal Q. This is my Royal Q. This is my Royal Q. This is my Royal Q. I want to talk about trade settings. There's something that I want to share with you today, and it is different from what I've been teaching you. You know, we have to come up with very many methods on how to set our robots. So that's how the market is. I'm saying the market is sweet, and I think people made the money yesterday. If you're not making money, it means there's a problem somewhere. And you people, if you don't make money, don't blame the business. You find where the problem is. Some of you, the problem is that you lack capital. You don't have capital. Another thing, some of you don't want to attend the Zooms, but you want to earn. So this is how the market is performing. The market is sweet. The market has no problem, because we told you Bitcoin will be trading at 60K, between 60K to 70K. Okay. So if you are there complaining about the market, then you are not yet serious in the business. Okay. If you don't have capital, look for capital. Look for more capital. If you don't want to look for people, look for more capital. If you don't have capital, look for people. Okay. So let me come here. Come here. Now, I want to teach you how to pick a coin by yourself. I want to teach you how to pick a coin by yourself. And I remember in the group, I gave you some coins. I gave you some coins you should trade. Where is Explorers? Gave you some coins to trade. Are you seeing some coins that I want you to trade? These are some of the best currencies you should trade in the market. You should deal with. There is Matic, there is Manta, there is Solana, there is Comp, there is OM, Obonk, Foroki, Jasmine, Wildcoin, Koti, Pepe, ICP, CKB. Those currencies have been making money. Those currencies have been making money. Okay? Yes, those currencies have been making money. So, let me come here and I pick my coin here. Which coin? Okay. Let me come here and I pick this coin. This CKB. CKB. I love this coin, by the way. I love it so much. This coin, I love it so much. CKB is one of the coins that I love trading. Okay. So I come here and I select this coin. Please don't enter a coin that is high. You enter a coin that is in red. Okay. That is in red. And I remember last time I taught you how to come up with a coral drop. How do you come up with a coral drop? How do you come up with a coral drop? How do you come up with the coral drop? This was the method that I gave you last time. This was the method that I gave you last time. My point of emphasis was on multiple buying ratios. I wanted to teach you more about the multiple buying ratios. So here we are going to come up with a coral drop. We're going to come up with a coral drop. Make sure you squeeze. Is it minimizing or maximizing? You minimize. Minimize, I think that is squeezing. You squeeze, you maximize, you minimize like this until you no longer see a support. Until you no longer see a support. There's a support here. Wait a bit. Are you seeing this current price and the lowest point? The current price and the lowest point. You can use these points to come up with a coral drop. To come up with a coral drop. The coral drop, you're going to use it in the margin configuration. But remember, I want to trade this CKB at the current price. I want to trade CKB at the current price. If I enter from here, it can continue to go down, Okay. Then as it continues to go down, this robot will be buying dips. Okay. Will be buying dips, or will be buying when the market is going down. When you buy the asset at the cheapest point and you also set margin calls, you are going to make money when the market bounces back. But if you enter the asset at the higher price and you don't have capital, that's when you are going to float. When they give you a signal in the group, some signals they give you some signals which are high. So you have to also go to your trading view and look at that signal I've given. Don't just enter the signal anyhow. Okay. Some of you are floating because they send signals in the group which are high. So you also go to Royal Q and find out, is it high or low? If it is low, then you enter. For me, I don't enter currencies which are high, and I will never give signals for currencies which are high. For me, I trade when the market is low, because that's when the robot is going to buy. Okay. So if I want to enter the currency at the current price, how do I come up with the coral drop? What could be the coral drop from here up to here? This is what I'm going to do. I'm going to come up with the coral drop. The coral drop is equals to current price. The coral drop is equals to the current price minus lowest price divided with the lowest price times 100%. Okay, times 100%. So this is the current price. Okay, subtract it from the lowest point, from the lowest price. The answer you get, divide it with this, then multiply with 100%. This is what we do. You get 0.016000 minus this. the answer you get, divide it with this times 100%. It will give you the percentage drop from here up to here. Okay. So let me go to my calculator. 0.01 minus the lowest, which is 0.014 234. Okay, are you seeing it? Then divide it with the lowest still, 0.014 times 100%. That is 12%. So it means if you enter this coin from here up to here, that will be a drop of 12%. Now, people with $200, people with $300, people with $400, you can use this drop. But if your capital is good, or you have more capital, I don't recommend you to use 12% drop, because this is too small for you. You just adjust. You just adjust. Maybe you take this as your lowest point. As your lowest point. All these are areas of support. There are very many. Anyway, there is that one. There's this one of 0.03. So let me assume that my drop is 12%. Okay, 12%, and my capital is $200. How do I go about this? I'm going to use 12% in this when I want to set margin configuration. I come here, you tap on create. Come to Martingale strategy bot here, then tap on create. You come here, next. Then come here on the trade setting. So when you come here, last time I told you there are 3 strategies you can use to set the robot. There are 3 strategies you can use to set the robot, and one of them was to first get the first buying amount. Let me first use one. Here. Let me say I want to first expose 20% of my capital. The capital you have, first calculate 20%. First calculate 20%. My capital is $200. What is 20% of $200? Give me the answer in the chat. What is 20% of $200? Give me the answer in the chat. Give me the answer in the chat. Give me the answer in the chat. What is 20%? It is 40. It is 40. You come here and put here your 40 as your first buying amount. You come there and put 40 as your first buying amount. Okay? Sorry. You come here. Put here 40 because my capital is $200. Now, I've calculated 20% of this capital. That is 40. Okay. Then after putting there your 20% of capital, you come here and save. You come here and save. You save like that. When you save, because you want to enter at the current, now this coin has started going down. You want to enter it at the current price. You just come here and start. You start the robot. Hey, you start the robot. Let your robot first invest 20% of your capital at the current price, such that you remain with the 80% of your capital to buy dips. to buy deep when the market is going down. Okay, so it is risky to expose all your capital at once as the first buying amount. Some of you first, you just expose your capital here like $200. This is very risky. It is too risky to expose all your capital at once as the first buying amount. You first calculate 20%, then remain with 80% to buy dips. This is a 40. Okay. Then you come here and do what? You come here and save. I mean, you activate the bot. You start the what? You activate the bot. So the robot will first invest the 20%. Okay. Then you come here and switch off margin calls so that you get enough time to set margin configuration, or you get enough time to set margin calls. Okay. When the robot has invested the 20% of your capital, you come here and switch off the margin calls like this. Okay. Again, you come back here, you go back and edit, come back to trade settings, still on that same coin. Okay. Then you come back here. What was your capital? Your capital was $200. We are removing 40. You are going to remain with 160. So you are going to use $160 to set margin calls. To set margin calls. Okay? Then what is going to be your first buying amount? What is going to be your first buying amount for the robot to buy deep? Let me say I want the robot to buy maybe $10, okay? $10. I want the robot to keep investing $10. How many margin calls that I'm going to use here? The number of times you want the robot to buy deep. The number of times you want the robot to buy deep. Let me say I want the robot to buy maybe seven times. Okay, seven times. Okay, take a profit ratio. If the asset rate gains value by a certain percentage, that's why the robot should give you. Let me say I want the robot to give me 3.5% profit. It means whatever the robot will reinvest in this coin, it will give me 3.5% of the money that will be invested in that coin. Okay. If you are not patient with the big percentages, you can just take 2.5%. Okay. Here I'm going to put a 0. Then I'm going to come here on the margin configuration. On the margin configuration. Do you remember your drop of 12%? Do you remember your drop of 12%? We are going to apply it here. Okay. How are you going to apply it? You are going to calculate the margin call drop. The margin call drop is equals the call drop, which you calculated as 12%. Call drop, divide it with the margin call limits. Okay. So we are going to get our 12% divided with 70 margin calls. You come here and calculate. 12 divided with 7 margin calls. That is 1.1. That's 1.71. You come here and put 1.71. If you've been attending my Zooms, it means you know what to do. So you put 1.71 from the first call to the last call. Okay. 1.71. Okay. So now we are going to come here. The multiple buying ratios. Here, what I'm going to do, I'm going to put, there are 3 methods you can use here. There are 3 methods you can use here according to your capital. There is a double up. There is double up. There is double up method. We use there is +1 method, and we use Fibonacci. Okay. These are the 3 methods that we use when we are calculating the multiple binary ratios. But these ones, they are for people with the capital. Okay, the people with the capital. If you don't have enough capital, you just use the other methods that have been giving you. Okay, whereby you calculate the multiple binary ratios as first binary amount times marginal call limit. You get that X answer. Okay, then the remaining capital you have, divide it with the X. You're able to get the multiple binary ratios. Okay, all these are methods of setting margin calls, or setting the margin configuration. Okay, now +1, I'm going to put here. Let me think that I'm going to put here 2, 3, 4, 5. This is a +1 method. Okay. This is 2, 3, 4, 5, 6, 7, 8. I'm starting with the 2. Okay. I'm starting with the 2. Sorry. I'm starting with the 2. You start with the 2, 3, 4, 5, 6, 7. Okay. And here you have to make some adjustments according to your capital. You should always adjust the multiple binary ratios according to your capital. Make sure the multiple binary ratios fit into your capital, or they fit in your capital. Okay, but remember our capital was $160, which is remaining. But when you add all of these, when you add 2 plus 3 plus 4 plus 5 plus 6 plus 7, what do you get? Two plus 3 plus 4 plus 5 plus 6 plus 7. What do you get? Give me the answer in the chat. 2 plus 3 plus 4 plus 5 plus 6 plus 7 plus 8. What do you get? You get 27, okay? You get 27. Okay. You get 27. It means when you add all the multiple binary ratios, you get 27. Okay? 27. You are going to multiply it with the second first binary amount, which is 10. Which is 10. 27 times 10, it is 270. But remember, your capital is 160. Okay, so you're going to make you're going to reduce on the marginal calls. I'm going to reduce on the multiple binary ratios. Let me put here a 2 here. Here you have to make some changes, okay, so that these multiple binary ratios fit in your capital. Okay, let me first put here 2. This is a 3. This is a 3. This is a 2. Okay, let me first put here a 2. Here a 2. Here a 3. Here a 3. Is a 4. And this is a 4. 2 plus 2, that is a 4. 4 plus 2, 6. 6 plus 3, 9. 9 plus 3, that is 12. 12 plus 4, 12 plus 4, what's that? 16, okay? 16 plus 4, I think that is 20. That is 20. 20 times 10, that is 200. Okay? It is too big. Our capital is 160. You reduce. Let us put here at 3. Okay. Let's put here a 2. Here a 3. 2 plus 2, that is 4. 4 plus 2, 2 plus 2, that is 4. 4 plus 2, that is 6. 6 plus 2, that is 8. 8 plus 3, that is 11. 11 plus 3, that is 14. 14 plus 3, 14 plus 3, that is 17, okay? That is 17. 17 times 10, that is 100. 170. But our capital is 160. So you guys, so you have to come up with the binary ratios which can fit in your remaining capital. You have to come up with the ratios which can fit in the remaining capital. Okay. Let us put here a 2. Let's put here a 2, then here a 3, 3. 2 plus 2. This is 4, this is 8, 10, 13, 16. Okay? That is 16. 16 times 10, that is 160. So it means these are the ratios that I'm going to use here. Are you seeing my ratios? For people with $200 as your capital, these are the ratios you can use. Are you guys getting the concept? Are you guys getting the concept? You sit down and be mathematical. The remaining capital, you sit down and come and generate your own ratios, the multiple binary ratios, which can fit in the remaining capital. Because at first we had $200. We subtracted it from we subtracted $40 as our first buying amount, remained with the $160. Okay. Now we want to come up with the ratios. We want to come up with the ratios which can accommodate our remaining capital, which is 160. And these are the ratios that I've come up with. Okay. Because, because 2 plus 2, that is 4. Plus 2, 6. Plus 2, 8. Plus 2, that is 10. Plus 3, that is 13. Okay. 13 plus 3, that is 16. Okay. That is 16. 16 times 10. That 10 is the $10 here, which gives us $160. What does it mean? It means that whenever the market drops by 1.71%, the robot will be multiplying the multiple binary ratio, with the first buying amount. The second first buying amount, which is 10, it multiplies 2 with this. It means on the first call, the robot will be investing $20 Second call, $20. Third call, $20, $20, $20. Okay, here $30. Are you seeing, guys? Even here, $30. Who has understood that method? I'm sorry, but how have you come up with 1.71? I calculated my call drop. I calculated my call drop. That's why I got the 12%. Or sometimes they give you a signal in the group and they tell you you trade maybe KCB at the current price. At the current price, take a profit 2.5, then drop maybe is 10%. Okay, you look into the signal and search for that drop. This drop, the drop of 10%, divide it with the margin calls. The margin calls. The answer you get, you put it here. You put it here. Oh, if your drop is 12%, you can make the first 4 margin calls small. The first 4 margin call drops small. Let me say here I put 0.5 because on the first 4 margin calls I want the robot to buy them faster. Okay, 0.5. And please, guys, don't do cram work. Don't do cram work. From the first call to the fourth call, you make them small. You can even put 0.3, 0.3, 0.4, 0.5, so that the robot buys them faster, or so that the robot invests some good USDT. From the first call to the fourth call. So if here I put 0.2, here I put 0.3, here I put 0.4, here I put 0.5. 0.5. I don't want this pencil to disappear. I don't want this pencil to disappear. Give me the answer. When you add this to this to this to this, what do you get, guys? 0.2 plus 0.3, that is 0.5. 0.5 plus 0.4, that is 0.9. Okay. Plus 0.5. What's that? What do you get? Give me the answer in the chat. Give me the answer in the chat. About buying 10, it is you just suggest that is 1.4. Okay, that's 1.4. From here up to here, that's 1.4. Okay, so our trade of which is call drop minus 1.4. Trade of minus 1.4 minus 1.4, that is 10.6. 10.6. How many margin calls are remaining? How many margin calls are remaining? 1, 2, 3. Okay. 10.6 divided with 3. That's 3.53. So here you put 3.5. Here also put 3.5. Here I put 3.5. That's a drop of 12%. Okay, 12%. If this one disturbs you, just calculate 12 divided with 7. The answer you get is this one, 1.7. You put it from first call to the last call. Okay. Our focus is here. Here it is your choice. It's you to decide the call drops you want to use. But our point of focus is here. The multiple buying ratios. This is your capital. This is your capital. Other things the leaders have been teaching you, the buy and call back, distributor and take profit allocation, the sub positions. Only that I wanted to teach you this. I wanted to teach you this today. Okay. Now let's try our capital let's try our capital of $1,000 here. Let's try our capital. Let's try our capital of. Let me try to look for this coin called. And this coin. Where's the coin? Okay, this is the UMA. This is UMA. This is UMA. This is UMA. This is UMA. Look for it here. When you come here, you can squeeze. Okay, like this. Okay. Now I'm seeing the current prices here, and another support is there. If you enter from here, the coin continues to go down, maybe up to here, the robot will be buying. Okay, robot will be buying. And also, if you want the take a profit, you can calculate the take a profit from here, maybe up to here or up to here. The take a profit, you can take between 2.5% to 4%. That is the range, according to your patience. When the market is good, don't set big percentages. You take smaller percentages so that the robot buys, sells faster, and then you go for another coin. Okay? You can take 2.5, 2.6, 2.7. The robot sells, then you go for another coin. Because some of you set 4%. When the profits reach 3.6%, again, the market continues to go down. See how you're going to miss the profits. So if you have no patience with the market, just take smaller percentages. Okay. So I'm seeing here lower low, and there is higher high. Okay. This one, if I enter from here, I can exit at this point. Okay. If I enter from here, I can exit at this point. Let me go to my crypto profit calculator. This is my crypto profit calculator. Let me say, if my capital is $1,000, I want to first expose $200. What is the buying price? The buying price is the current price, which is this. 3.438. 3.438. 3.438. That is my buy price. Then the sell price, you get either this one or this one. Let me take 4.220. 4.220. That's 22.75%. That is 22%. But this is big for me. That is too big for me. If this is too big for me, I can say, let me take only 3%. 3%. Now, what could be the color drop if the market doesn't go up but continues to go down? Then I come here, I calculate what is the percentage drop or the percentage decline from here up to maybe around here. You get the color drop. Color drop is equals the current price minus the lowest price divided with the lowest price times 100%. Okay, so we get our 3.446. People were asking me, where do you get the coral drop 3.446 minus 2. This one, that one, 2.546. 2.546. The answer I get, I divide it with 2.546 times 100%. Now, people with a good capital, you have $1,000 and above, this can be your coral drop. Okay, this can be your coral drop. But people with smaller capital, 200, don't use this. Okay, don't use this. This one is too big for you. You can take 12%, you can take 10%. Another thing, guys, you find out coins which perform very well. So that even if you have smaller capital, you can simply get something good in the market. Go for those coins that we gave you, whereby when you enter them, it's a sure deal, you have to make some money. But you find some people there in the coins are not moving, they're just there, stagnant. They are not going up, they're not going down. They are just there. They are just there. You go for those currencies which perform very well, whose volatility is a bit okay. We have Bonk, there's Jasmine, there is WorldCoin, there is CKB, there is Floki. Go for those coins. Go for those coins. So for the purpose of learning, let me teach you how to do this. Okay. Then I come here, I tap on create. This Zoom is recorded. Martingale strategy bot. Come here, tap on next. Trade setting. Trade setting. What is your first buying amount? How much do you want to expose in the market? If you have your capital of $1,000, how much do you want first expose in the market? You can say, let me first expose maybe 20% of my capital. Some people exposed 10% of their capital. That the 90% go for the margin configuration. Okay. For me, I can use 20%. What is 20% of $1,000? That is $200. That is $200. I'm going to remain with the $800. Okay. So after putting here my $200, I'm just going to come here. I save. Okay. When I save, I come here. I tap on the start button. Okay. Let your robot invest the $200 here. Guys, make sure you trade one currency at a go. Don't trade more than one currency. Okay. Don't trade more than one currency. So when the robot invests the $200, I will come here and I do what? I switch off the margin code. It's already switched off. Then I come here. I come back here on the trade setting. I go back and I edit a few things. Now I come here. What's going to be my first buying amount? My first buying amount here, I can use 15. I can use $15. Okay. I can use $15. Now people are going to start saying, now Leader has changed the things. Last time he taught us something different. Today is now confusing us. Who is saying that I'm confusing? Are we following? Guys, are we following? Guys, are we following or I'm just confusing you? Are we following? The $200 is the 20% of my capital. Okay. Okay, let us continue. Now, it means that the robot, when the market continues to go down, the robot will be investing the $15, but it will be multiplied with the multiple buying ratio on each and every margin on each and every margin call. Okay. Margin calls, how many can I use? How many margin calls can I use? I can use maybe 10 margin calls. 10 margin calls. Take a profit ratio. I can take 3.5. Here I can put a 0. Okay. These ones you know what to do. Then I come here. I come here on the margin call drop. Margin call drop, I taught you how to calculate it. Remember our drop was 35. Okay, 35. How many margin calls are we using? We are using 10 margin calls. Okay. 10 divided to 35 divided with the 10, you get 3.5. You come here and put your 3.5. 3.5. People who are ever crying for floating loss. 3.5. 3.5. 3.5. If you want to avoid floating loss, you do this. Do you know that if the robot doesn't buy any margin call, still I'll be on the safe side, because I'll be getting the profits from the $200 it invested in the market. Okay, that's 3.5 from the first call to the to the last call. Or you can say from the first call to the fourth call, I want to use maybe 1.5, 1.5, 1.5, 1.5. Okay, so here it's you to decide what to do. It's you to decide what to do. You can say from the first call, maybe 1.5, 1.5, 1.5, 1.5. Then you increase the percentages from the fifth call going down. I think that is simple for you. So our focus is here. Our focus is here. So the multiple buying ratios I'm going to use Fibonacci. I'm going to use Fibonacci. Here I'm going to put a 2. Here I'm going to put a 2. Here I'm going to put a 4. Here I'm going to put 8. Here I'm going to put 16. From 16, here I'm going to put 32. Okay, that is 2, 4, 8, 16. This is 32. Then still from the sixth call, I go back. I start with the 2. Here I put a 4. Okay, I repeat what I had said there in the previous calls. From the first call, from here up to here, this is 2, this is 2, this is 4, this is 8, this is 16. Yeah, okay. So I'm going to repeat the same thing. Now this is 32. From the first call, I mean from the fifth, from the sixth call. Sorry. Okay. Here I can say. Here I can say. Let me put here a 2. Here I'm going to put a 4. Here I'm going to put 8. Here I'm going to put 16. Okay. Here I go back and I put a 2. Here I put a 4. Okay. That's how I can set mine. That's how I can set mine. Now, let us calculate together. Let's calculate together. 2 plus 4. You give me the answer. Okay. Plus this. Okay. I'm coming in the chat and you give me the answer. Plus this. Okay. Yeah. Where is it? Sorry. This plus this. Plus this. Plus this. Plus this. Plus this. plus this, plus this, plus this, plus this. What is the answer? Give me the answer. Give me the answer. The 66, right? 66, okay? Okay. 66. Someone has given us 66. Now, 66 times 15. What do you get? 66 times 15. That is 990. But remember your capital. Your remaining capital is 800. Your remaining capital is 800. It means it exceeds your capital. It exceeds your capital. You come back and maybe here you can put 8. Can put 8. Okay. Are you guys getting this concept? Someone has. This is the Fibonacci method. This is the Fibonacci methods. And I mean, this is the double up. This is the double up method. From the second call to the fourth call, we put 2, 4, 8, 16. Okay, that is the Fibonacci method. Then you repeat the same thing. You put a 2, 4, 8, 16. So you make sure that you come up with the ratios which can accommodate the capital. Which if your capital exceeds, I mean, if the margin calls, if the multiple binary ratios with the first binary exceeds the remaining capital, you reduce on the what? Reduce on the call. You reduce on the multiple binary ratios. You reduce on the margin. I mean, you reduce on the multiple binary ratios. Say that they fit with they fit in the 800 as your remaining capital. It means when the robot buys, it will be here to be investing 2 times 15, 4 times $15, 8 times $15, 16 times $15. That's what it will be investing in each and every call. This is what we call the double up. This one is going to help you to pull the floating loss. It's going to help you to reduce on the what? On the floating loss. Because the robot will be doubling the first buying amount with the multiple buying ratios. Okay, with the multiple buying ratios. Are we getting? You said according to how much capital you have. Another thing, guys, you have to be creative here. Even if you don't follow the methods we give you here, for you just sit down and come up with your own ratios which can accommodate the remaining capital. Even if I don't use this, but for me, I just sit down and I come up with my ratios which can accommodate my capital. Because if I have my $1,000, and I use like a 20%, I'm going to remain with the $800. Okay, then you sit down and generate your own ratios, which when you buy all of them and you multiply them with the first buying amount, they give you exactly $800. Is that hard? Is that hard? Okay. Yes. You just sit down, then you come up with your own ratios. People here, they are very creative. There's someone who's using 4. Here I use a 4. Yeah. Yeah. Here I use a 4. Here I use a 4. Yeah. Here I use maybe 5. 5. 4. 4. maybe here I put a 6, so that when you add all of them, and multiply the answer you get and multiply it with this, it will give you $800 sharp. You are good to go. Is that hard, guys? Even if you don't follow what I've taught you, you just sit down and calculate. Just sit down and come up with your own ratios. Okay? Yeah, this is not cram work. You just have to be creative. Even if you don't use the double up method. Because if here I put here, maybe here I put here a 4, a 4, a 4, a 4. 4, if I put here a 6, or here I can say, let me try to use plus 1, 2, 2, 2, here a 3, here a 3, 3 plus 2, this is a 5, 5 plus 3, this is 8, this is 8, 8 plus 5, 8, this is 13, okay? 13 plus 8, 13 plus 8, 13 plus 8, that is 21, okay? That is 21, okay? 21 plus 13, 21 plus 13, that is 34, 34. So people who have like a $10,000, $5,000, you can even use this method. Anyway, for you just go back and do what? Just go back and calculate and come up with your own multiple binary ratios. When you add all of them and multiply it with the second first binomial, they will give you $800 as the remaining capital. Make sure they balance with your remaining capital. Make sure they balance with your remaining with your remaining capital. It's not constant figures set by a leader in the lesson. Rather, you can set according to your capital in the end. Make sure when all about they match with your capital, respective of which, yes, that's it. That's it. This one has explained it very well. Just come up with your own ratios. Just come up with your own ratios, which can fit in the remaining capital. If that is hard for you, just use the other method that I gave you. Get your capital, divide it with the margin call limits. My $1,000 is $1,000 divided with the 20 margin calls. Let me say here I want to use here I want to use, how many margin calls can I use? I want to use maybe 20 margin calls, okay? 20 margin calls. If you don't want to confuse your head, $1,000 as my capital divided with the 20 margin calls, okay? This is one, this is what's that? 100 divided with the 2. This is 50, okay? You come here and put your $50, okay? Hey, when you come here, just put your 1. Make mathematics easy. As long as you make money, put here 1, okay? 1 from the first call to the last call. If the other mathematics has failed, use this one. Shortcut. And you are done. Shortcut. That's it. The first 4 margin calls, you can even put 1.5. Leader Samson is going to teach tomorrow morning. He was supposed to teach today. I don't know what happened to him. Here I put 1.5, okay? Then you increase the percentages from the 5th call going down. That's it. Okay? That's it. But here I'm going to use 19 margin calls, okay? You know why? I told you if you are to use this method, If you are to use this method, there is 19. If you are going to use 20 margin calls, put it in mind that you're going to use 20 margin calls. It should be in your mind that you're going to use 19 plus 1. 1 is the first buying amount, which is added to this. Questions? How can I add on a coin that I don't have? You come here. Come here. Tap on this plus button. Tap on spot. Like this. Then come here and tap on all. Like that. Then add. And add. They already added. They will be added here. Okay. Yeah. Kindly repeat how to come up with the color drop. The color drop, sometimes it is given in the signal. It is given in the signal, okay? It is given in the signal. If the color drop, they give you a signal like this. Let me say they tell you, you enter this coin, maybe enter key at the current price. Okay, current price, take a profit, 3%. Then it drop is 15%. Okay, so when you come to margin configuration, here, yesterday I got so tired. When you come to margin configuration here, you just get the drop given to you in the signal, divide it with the margin calls. How many margin calls are you going to use? Maybe 10 margin calls. That is 1.5. You put here 1.5, 1.5, 1.5, 1.5 from the first call to the last call. Okay. Or for you can also calculate it by yourself. You can calculate it by yourself. You come here. Calculate by yourself. If you want to enter at the current price, then if the market wants to go down maybe up to this price, what could be your color drop? You get this minus this. The answer you get, divide it with this, times 100%. You get the color drop from here up to here. If the color drop is too big, you can reduce it according to your capital. Okay, according to your capital. What if I reduce the number of margin calls by increasing multiple buying ratio? Is that okay? What if I reduce the number of margin calls by increasing? It is better, guys. It is better. It is better to use if you okay. Let me say it's better to use very many margin calls. Yeah, it is better you use very many margin calls and small first buying amount. Some people even use $10 as their first buying amount. They use $10 as their first buying amount. You can use $11 or $12 and set very many margin calls. And set very many margin calls. Okay, how can I stake on a trade and what could be the minimum price? I'm not getting that question. I have a program in town. Have you guys understood today? Have you understood? Do you have another question, guys? If I have 500, how much should I should buy? 20% of your capital. 20% of your capital, then the remaining 80% set margin calls. Expose 20% of your capital. Okay? Yes. Expose 20% of your capital at the current price, then the 80% of your capital is set margin calls. By the way, guys, don't do cram work. Don't do cram work. If I have my capital $500, how can I manage it? How can I manage it? Because if your capital is 500, what is 20% of your capital? It is $100. I'm going to remain with $400. You can set very many margin calls that can fit in that $400. But some of you do cram work. Don't do cram work. Cram work is very bad. Yes, but you said you will teach the 3 strategies. We have seen 2 remaining. Now, you guys, I'm going somewhere. Is it okay to set a coin in cycle? It is okay to set a coin in cycle unless you have capital. Okay? Cycle is not for everyone. Now, people with the $200, $200, 100, 500, 600, setting a coin in a cycle is not good, and I don't recommend that. Okay? I don't recommend people to trade in a cycle. Yeah, I don't recommend people to trade in a cycle. One shot is better. But if you have your capital 5,000, 4,000, 3,000, it's okay to trade in a cycle. Yeah, because you find that the coin has pumped by 50%. What if it goes down by negative 50%? And your coin was in a cycle? What will you tell us? What will you tell us? I don't recommend people to trade in a cycle, especially when your capital is very small. Even $1,000 is very small capital to trade in a cycle. Okay. How calculate take a profit? It is given in the signal. Take a profit is given in the signal. It is given in the signal. Sometimes I use this application. I use this application. Profit calculator. Profit calculator. I use this one to come up with my take a profit ratio. Simply, you come up with the entry point and the sell price where I want the robot to sell for. Now, for example, let me give you an example here. Let me give you an example here. Let me give you an example here on which coin. Give you an example here. What is wild coin? This is wild coin. Wild coin is good to trade. Wild coin is good to trade. Now, if I enter wild coin at this price and I exit at 5.100, if I enter from here and I exit at this price 5.100, what could be the take a profit from here up to here? Here, just come here on my calculator. 4.551 as my buying point. 4.551. Sell. I want to sell at 5.100. Your investment, you 20% of your capital, maybe $200. Okay. Then tap on calculate. That is 12%. Have you seen it? Let's first watch this ad. And If you are using this application, if you want to remove the ads, you have to pay some money. You have to pay some money to remove the ads. Okay. Okay. Let us see here. It is here now. It is now here. If I invest $200 in wild coin, if I enter this current price, then I exit. If wild coin goes back to 5.100, it means I'll make a 12% of my profits. And are you seeing the profit that I'll make from the $200 to be 24? So the more money you add in this coin, the more profits the robot will make for you. Okay? The more money you add in this coin, the more profits the robot will make for you. Because you find that the market has continued to go down, you keep investing more money. But some of you want to add more money when the coin is going high. That is very dangerous. You should be adding more money. That's what we call manual replenishment. Manual replenishment. Here you simply add the money in that coin. You do it manually on Royal Q. Just go to buy. And I'll show you there. So I'll make 12% of the profits. Okay. Manual replenishment, you come here and add more money. Okay, you add more money. And if you are in deep floating loss, you first compare the capital you have and the floating loss you have, because some capital cannot pull the average price closer to the current price. Okay. Some of you are in the floating loss of -50, -40, -30. And you want to add $50, my friend, don't add more money. Just trade another coin. Okay? If your coin has floated by -30, -40, don't add more money in this coin. Okay? It's better you go for another coin. Unless you have good capital. You increase very many margin calls. You increase more margin calls. Let the robot buy and buy deep. But people who have $100, $200, $300, you don't have money and you are doing manual replenishment. People, go for another coin. If your coin has floated for 40%, 30%, even 20%, and your capital is very small, leave it. Leave it and pray to God so that the market goes high. Because even if you add more money, the coin is in -20 or -30, you are adding more money again, it continues to go down. You start crying for us. Leader, you told us to add more money, the coin is not going high. What should I do? I don't have capital. It's better you go for another coin, unless you have more capital, like $1,000, $2,000. That's why I told you, if your capital is good, like $1,000, you set very many margin calls. Okay? But manual replenishment is people with good capital. Because here you just come here. Unfortunately, this is not a trading account. Just come here. You tap on the market price. You invest. You invest your $100 or your $200 in the market at the market price, then you confirm. Then the coin still will continue to go down. Why don't you just trade another coin as you're waiting for that one to deliver? Or if you don't want to do that, you increase more margin calls. If your capital is $1,000, you can even set 30 margin calls or 25 margin calls. Let the robot get tired of buying. Let the robot get tired of buying. Okay? Guys, set very many margin calls. Set very many margin calls. Set very many margin calls. How am I going to operate? I have one of the, I ask for help. I've already told you that. Maybe you have just joined a business. Can I trade the BTC one shot? You can. You can trade the BTC one shot, but BTC is good, it's sweet in cycle. BTC is sweet in a cycle. BTC is sweet in a cycle. I recommend someone to trade BTC in a cycle. If your capital is $2,000, you can allocate $1,000 to Bitcoin and trade it in a cycle. Then 1,000, the remaining capital, use one short signals. 1,000 is okay. 1,000 is okay. 1,000 plus is okay to trade BTC in a cycle. In this business, there is no minimum. You guys avoid asking such questions, minimum, maximum. It is your capital. Now, what if I tell you to look for 100 millions? Why do you like minimum? There is no minimum, there is no maximum. For you, according to your goals, do you have goals? Yeah? There is no minimum, there is no maximum. Okay? Just look for capital. Trading is so sweet when you have capital. Tolowoleza wa capital wa wansi. Okitegeera, tolowoleza mu capital wa wansi, guys. Lowoleza waggulu ku kintu ekinene. There is no minimum, there is no maximum. When we expose 20%, we immediately start the robot. Yes, you start the robot, then you first go and switch off margin calls so that you get enough time to set margin calls. Then after setting margin calls, you switch on margin calls button. Is it good to set all that profit with the 200? Is it good to set all that profit with 200? Huh? How do you add more money coin when it's going down? This is what you do. You just come here, tap on buy. You just tap on buy. You tap on market price. You put the dollars you want to add. But this one is for people with a good capital. People with a good capital. That is manual replenishment. Then the second way is increasing margin calls. Just add the moment on Binance, then you increase margin calls. For example, if you had set maybe 10 margin calls, the robot has bought all of them, you have got more capital, then you increase more 10 and they become 20. You allow the robot to buy deep. Cycle is good, but is for people with a good capital because the robot will buy, sell, buy, sell, buy, sell, buy, sell, buy, sell, buy, sell. But you should know when to change it to one shot. Okay? You should know when to change it to one shot. I have $1 million. Okay, guys, that's it for today. Thank you so much for attending. Yes. Tomorrow I will not train. We shall have another leader to take us through what he has. Hope you've learned something on Zoom today. Who has learned? Who has learned and who has not learned? Okay. People have learned. Okay. Have a blessed day.